Our guest joining us now, Sailesh Bhan of Nippon India AMC is here with us. Sailesh, good afternoon and thank you very much for your time today. Great to have you, long time connecting and chatting. I was just looking at the feat which you achieved at the pharma fund at Nippon India. It's been the longest running. I remember I was in my college at that time doing my MBA when you guys had launched this pharma fund, and it's done some a 20% CAGR in the 16-year period. How did you manage that? Talk to us a little bit about some of the areas which were difficult phases. Surely now everybody is talking about pharma tailwind and the sectors getting rediscovered, not only in India but globally. But I do remember 4 or 5 years back, there was carnage in the sector. Dr. Reddy's, Cipla, Divi's at one point in time was around 400 if I'm not wrong. You had to go through bad patches as well. Talk to us some of your experiences when it became difficult to run this fund.
Each sector fund, has its own cycles, or kind of ups and downs which come across. Thankfully, this sector has tremendous advantages versus others. So it had that secular nature and characteristics. So some part of the business was generally, especially the domestic business, was not impacted over the course of the journey. Broadly, it had two very difficult phases. One was the first 5-7 years where, the markets were completely focused on infrastructure, power and various other areas, and pharma was not given its due attention. This was somewhere up to 2007 or 2008, from 2005 onwards. So that was a phase where it was all an investment boom in India, and hence the interest in the sector was very limited. In fact, there also the weight of this sector in the index had dropped to as low as 2.5-3%. We have seen a second phase of that also happen from 2015 to 18, like you pointed out, where you had significant issues relating to the US market. And this came off after a very strong 25-30% compounding by pharma stocks in the previous 5 years. So I think these were the two phases. Interestingly, this sector has also been hit by a lot of news flows which come about. So every single US FD observation is treated as if this sector is not going to come back at all. So there's a lot of volatility because of those news flows which have come about. But underlying trends and underlying factors in the sector only continue to improve, whether it is quality of businesses, whether it is the amount of money invested in R&D, or whether it is the broader macros for the sector, which continue to be favorable over the last 16 years.
Sailesh, the other thing I wanted to discuss is not about near-term issues. We are speaking to some of these companies which you are holding in your portfolio regularly, and we are getting a sense that the pricing pressures in US is kind of ebbing out, and back home in India, opportunity is rising in a different manner once again. And these companies are much more efficient in terms of regulatory capabilities also. But what I'm trying to understand from you is this. How, because of the low ownership levels and renewed, manner in which some of these companies are being run now, both on the regulatory side as well as capital allocation side, how does the next 4-5 year period look like? And moreover, now this is no longer just a pharma fund, it's a healthcare fund. New activities such as diagnostics, etc. have also added. Tell us how the 4-year picture is looking like for this space on earnings front.
This is very interesting because in the last 4 years, the sector had gone through virtually, like you said, a carnage, because earnings had actually collapsed for this space. And this was happening because the previous 5 years, the earnings had grown at 25-30% for most businesses. Post that collapse now, over the last 1.5 years, we have seen significant fundamental changes in the sector. First, obviously, the US pricing environment is not as bad as it used to be before, and there is definitely some improvement there. Second is the fact that a lot of companies who had built their businesses around 20-25% kind of compounding growth have recorrected their cost structure materially. In fact, you're seeing a lot of cost pressures coming off, and companies have redesigned their organizations, whether it is reducing manufacturing infrastructure, whether it is reducing unproductive R&D spend, which was required 5 years back, but not today in the current environment and the economics there. So many such aspects have been taken care of by the managements in these businesses, which is allowing them for earnings to start rising double digit. The general outlook when we look at these businesses is that earnings in the sector can actually double in a 4 to 5 year period, which makes it one of the sectors with the highest visibility at this point of time in terms of earnings growth versus what you see across the market today. The other important aspect is the domestic piece. The domestic piece was a very small component of overall earnings about 5 years back. So it was 15 to 20% of the total earnings of this sector because US business had become very large. Over the last 3 years, one, because of slowdown of the US business, and second, because of domestic business continuing to compound at double digit, we are now seeing that the share of domestic profits has risen to close to 40 to 50% in larger companies in India, which gives them a lot of stability. And it is a significantly, India being a chronic market, you see a lot of sustained growth possible. In fact, new patient recruitment and everything in India is only keeping on increasing from where we stand today. So directionally, earnings are becoming more secular, and the probability of earnings doubling in the 4 to 5 years only increases given that the mix has also changed in the favor.
Right. Sailesh, out of domestic branded, US generic opportunity, domestic opportunity, contract research, API-led plays now, which is becoming a import substitution. Out of this basket, where do you see the most earnings potential versus attractive risk reward?
It's interestingly still lies in the broader domestic formulation, the branded business in India. See, India is at one level very early stages of, I would say, diagnosis, testing, and all these activities are, in the last 8-10 years have significantly picked up. Otherwise, there's significant underpenetration, less compliance in terms of treatment, and generally the healthcare awareness has been very low. When we do an analysis, you will find that nearly 27 crore people in India today are over the age of 50 years. And every year, nearly 80 lakh to 90 lakh people get added to this bracket. The pharmaceutical consumption of people over the age of 50 is in multiples of what it is there under the age of 50. So that is creating virtually a market which by volume is growing by 4% a year. By better compliance or better diagnostics, better awareness, per capita income is growing way higher. And with pricing advantages can actually compound materially for the next 5-7 years. So the domestic business primarily is a sustainable, attractive business. And the full opportunity in this category is yet to come out. Other areas are also interesting, like you talked about the API manufacturing space or the contract manufacturing space. India has been the hub of manufacturing in pharmaceuticals, even if you go back about 10 years back and all. But China came around and took out significant API business out of India because of the pricing advantages it could command. We are seeing clearly a shift towards manufacturing in India, people wanting to integrate backwards, people wanting to create significant back-end infrastructure and reduce dependencies on one single supplier or one single region. And that allows for a comeback of API manufacturing in India. And there also the earning potential there is actually pretty high, given that, a large part of APIs are still imported.
One of the very interesting, con calls which you had recently conducted and I had heard about, you spoke about a unique opportunity in a way called specialty pharma. Up till now, we had heard about specialty chemical. This term specialty pharma, what kind of opportunities do you think Indian companies, because when you say specialty pharma, then the probability is that these are high margin areas. They are R&D led kind of areas, and hence they may also deserve or start getting command better valuation than rest of the pharma. Talk to us about this a little bit.
Till now, India has primarily been, or Indian pharma has primarily been in the generics market, right? Which is, companies which are products already in the marketplace, and Indian companies develop very efficient copies of the same under conditions which are required by the US FDA and supply. In that category, India has now become materially dominant. The larger market in the US is actually the specialty pharma or the branded generics market or branded pharma market, which it is called, where innovative products, either first to market or new therapies come about, which provide a material advantage from existing solutions to patients there. This market is at least 7 times, 8 times, 10 times larger than the US generic market. And Indian companies are attempting to target this. 10 years back, this opportunity was virtually non-existent because the amount of money needed to invest and take product to the US market, doing the clinicals and all that, was a very substantial sum. But today, many companies and in India have balance sheets wherein they can afford, if productively used over a 5-year period, can put in maybe 10, 15, 20,000 crore rupees towards investing in specialty space. It's a tough business, but if you execute it, you can actually create brands which are $500 million or $1 billion in size over a 5-7 year period, which is highly profitable and which allows for further increasing investments in R&D. In fact, most large global companies have actually been formed by few billion-dollar drugs which have made them successful. So they could create new areas and therapies where they could invest money in and actually outsource or buy out products and launch in the US. So I think this market, the specialty pharma market, is a very interesting market. It's a high margin and a significantly larger market which Indian companies are attempting to target. And some Indian companies have already put in close to $1 billion in this area. So I think the risk-taking ability is there. And I think a few successes there will navigate the Indian pharma businesses to invest a lot more in this area over the next few years.
Sailesh, one last point. Though you're, I was looking at the fact sheets and only the top 10 names come, but there is a very interesting rising tide of mid-cap companies in this space, healthcare space now, both in all three: diagnostics, mid-cap hospitals, as well as interesting pharma companies which are R&D backed, have done bulk of their capex, no debt. Are you also looking carefully in that side of the broader market as well for newer opportunities, or how are you scanning the market for higher alpha from here on?
Interestingly, many subsegments of the market in India are still very small. Hence, they come in the mid and small cap category. Like, for example, diagnostics today, most of the players are in the mid and small cap category in India. Hospitals, a lot of them are there in the mid cap and even small cap category in India. So I think, and they are very early stages in terms of their scale today. In fact, the scale and the kind of investment this country requires in terms of healthcare, I think it will take years for us to reach anywhere closer to the desired levels. A lot of these businesses which are small and young, like for example, diagnostics, can actually compound or do double-digit volumes for a long period of time. And we have seen reasonable consolidation there happening. And excellent and efficient players can actually materially drive volume growth for the next few years. And they are very capital efficient. So smaller businesses which are capital efficient will not have challenges of capital in future. And hence their ability to grow is possibly far more than other segments of the market which require a lot of capital. Hospitals on the other side, the kind of infrastructure and the scale needed in India is huge. Medical insurance has to happen. And there are a lot of good businesses there who have created the model and only need some more solutions to be able to deliver it at a larger volume at a lower cost. I think that matrix is still not yet kind of achieved. If you see that kind of a thing coming through where some players are attempting today, that business also can have reasonably better return on equities than it has today. And given that it's a little capital intensive business versus others, definitely the progress there has been slower. But I think that is also a market where there's a lot of unmet need. Insurance can drive that change as well. In other areas, there are some smart companies who are investing very effectively their R&D dollars in the small size category and producing results which are very effective rather than spending money on broader areas. Though the risk reward there, at some point of time doesn't work in your favor when those products fail. But I think that is possibly the only way where some of these small companies can actually reach a scale and size which will allow them to diversify their product pipeline and portfolios. So these are the three categories which we do have investments in our portfolio. And we think the healthcare as an opportunity, in addition to pure pharma, also continues to be very attractive.
And lastly, I'm curious, you've seen the entire cycle when these companies are, say, $100 million odd, today they are billions of dollars of companies. And then again, 6 years back, their representation on the exchanges went down very sharply, and now it's off that worst period of theirs. In the entire cycle, how do you think the healthcare space representation in the Indian exchanges, in the listed space? What kind of market capitalization they have potential to command as a percentage of total in the next 5-10 years? If I were to ask you this, compared to how the trends are globally.
Rising per capita income in India will drive investment in healthcare. And at the moment, at 3% as a part of your broader index, there is virtually no representation or a very small representation. And I think this is set to change given that the sizes of these businesses are becoming larger. More importantly, these are also addressing large international markets where we are dominating. For example, in terms of if there is any sector where there is make in India visible, it is actually pharmaceuticals, because we have dominant market shares in US generic markets in a lot of products, and all of them are manufactured in India and supplied to US markets and other developed markets. So, and Indian companies today now sell their products in nearly 150 countries in the world, have brands in 15 to 20 countries in the world. So the size of the market itself is larger, and the size of our companies becoming material. I think the next level of growth is available to them because they can invest, like I said, 10, 20, 25,000 crore rupees over a 5-year period to capitalize on that opportunity. The representation in the index today is very, very low at 3%. And it was at early 2014 or late 2014, it was close to double digit or higher than double digit. I think there is a journey which is yet to play out. And like I said, the large section of patient population over the age of 50, it is so large that if it is represented independently, it will be the 4th largest country in the world. So I think you can see this journey for this sector is long. Second, the representation in terms of investors' portfolio will only keep on going up given its largely a secular nature, secular characteristics which the sector has. And this journey is definitely has the scope to come to internationally closer to double-digit representation happens in this sector or has happened in the sector over the last decade.
Right. All right, Sailesh, we'll let you go on that one. Thanks so much for joining us today. That was Sailesh Bhan talking about the key trends to watch out for and what's the potential of pharma and healthcare. In fact, larger theme is that over the next medium to long term in the Indian market.